Institution always use retail people for liquidity, and this is what exactly we were saying. Market is going in the long, means it is not a bull run, it has not changed the trend, it will come down. There is a order block. In fact, in previous video we put a big order block, we put a big graph, we illustrated everything, what is going to happen, what might not happen. Now I'm not going to say I am right every time. I have gone terribly wrong also, but people are skeptical. Whenever we are wrong, they come and complain, they come and jump on us, but when we are right, they don't talk a single word, right? Meantime, go and see in the comment section in yesterday's video how many people were saying you are wrong, you are wrong. Nothing. I'm not complaining, but telling how this your mindset is working. Your mindset is advantage for institutions or FIAs. Your mindset is where they play, right? When you go long, they will short the market, and when you short the market, they will go long in the market. What just happened is you have given liquidity to FIAs to short the market, and the market is below 22,500, and hopefully it will touch 22,300. But before going deep into the market, what might happen, what might not happen, everything we will I have to tell you about something, that we have a webinar about our option trading strategies, which is going to happen on Sunday 30th of March 11 a.m., for which the link is on the description below. Now on top of the webinar, you are going to get access to knowledge, our knowledge base, where you will have access to 65 option trading strategies. You will have access to our premium traders group, where around 450 people are there, and plus all the webinars which will be conducted in the future also you can see free of cost. So this is a one-time payment. If you want, you can join. The link is on the description below. Now going to the markets, as I told you, so this is the chart which we have explained on last Sunday, right? Sunday morning we posted a video, and we did everything, that the bullish order block, bearish order block, everything is there, and you can see the rejection at around bearish order block. There is a bearish order block. It was a fake out, and there was a huge order at around this area, and we have come on the downside. Now what might have happened, do you think? Now looking at the markets going at the green on the first half an hour, or let's say first 20 or 30 minutes, people would have thought, okay, we should be long in this market because you are continuously seeing big green candles. But what our brothers, or what our FIAs or institutions are doing is, they have huge order here. That is what I told on Sunday's video. They will have huge orders here, and once you have placed the order, that orders will be a liquidity grab. You are giving liquidity to FIAs, you are giving liquidity to institutions to grab the liquidity, right? So once your order, let's say you are an option buyer, you would have placed the order here, market going and coming down and hitting stop loss at around 22,600 or 22,650. That is a liquidity grab. If you are an option seller, you would have sold call option 22,700 or 22,650 or 22,600, and market is coming, your stop loss would have hit, and that is also a liquidity grab. This is stop loss hitting on the both sides, whether on the downside if you are a call seller, or if you are on the higher side, if you are a call buyer, is further fueling the downside, and we are coming on the downside. So this is what happened in terms of market, and this is the smart money concept. So people always say, why you are always into smart money concept, you do that, you do this, all bullshit. I will tell you, we'll share our screenshot, we will share our trade. We are in profit, no loss, in spite of market moving higher, lower, 200, let's say 500 points, on roughly around 500 points movement. We are in profit, and we believe we will continue to be in profit. And as I told you, we have told that if we are lost, we will exit, we will stop doing everything, and we stand by that, right? Now, what might happen in the future? What is the thing which can happen in the future, right? That is the main question. Or what might happen tomorrow is the main question. Now, if you see US future, this is the US future. You can see Dow Jones is down by around 400 points. S&P 500, S&P Nasdaq is down by around 1.4%. So apart from that, European market is dragging. So both US market, US futures and European markets are not performing, and that is dragging our market, and we are likely to go on the downside is what we are expecting. Now, when we say what is the downside, you can ask me till where we go. That is the main question. Now, you have to understand here around 22,300 levels, there is a order block. That is where you shouldn't be going short the market. You shouldn't be shorting the market. Now, if you short the market around this area, see, lots of people are in loss, and there is lots of message in terms of loss because they have gone long in the market. See, whenever you have to have a mentality to take a risk, right? You have to always take a contra view. Now, listen. Now, let me tell you something. If you take a contra view, let's say everybody is in the long in the market, you take a contra view and don't take live trades, just take a paper trading or just put some strategies and you see how it is going to work, and just prepare an Excel table and you take 10 contra trades. Maybe out of 10, 7 to 8 will be working in your favor, and if your risk reward is very favorable, you are going to make money in terms of contra trades, right? It doesn't mean you are going to be successful every time, but I'm just giving a hypothetical example. It will happen, it may not happen. So there are lots of things, lots of factors we have to consider in terms of taking a contra trade. Right now, what will happen? Market will come on the downside. Till where it will come, I am expecting maybe tomorrow. If futures, if US market continues, see, there are lots of things in between. US market has to open, US market has to close, Asia Pacific has to open tomorrow morning. So lots of things are in between today 3:30 and tomorrow 9 a.m. So we will have to wait and see. If the US market continues like what it does now, we are likely to come on the downside, maybe 22,300, or let's say even 22,200. So 22,200 or to 22,300 zone is a very, very important zone where you will see lots of things happening in terms of market, because previously what we have seen in market is that whenever market touches 22,200 or 22,300 level, there is lots of knee-jerk reaction. There are lots of FIA activity around this area, which is around 22,200 level. So be careful at 22,200 level and make sure you hedge your position. And as I told you, there is no positive. When this market went on the higher side, I told there is no positive news for the market to go on the higher side. That is firm positive news. See, now Trump not talking about, India is not a positive news, right? See, he is talking about China, he is talking about Mexico, he is talking about Canada, he is talking about reciprocal tax. And people think if he is not talking about India, it is a positive news and they are going long in the market. That is not the case. So you really need to have a positive news, let's say in terms of macroeconomic data, in terms of GDP, in terms of repo rate, in terms of MCLR. Do you have a positive rate in terms of all this inflation data, all this? Then you can say, okay, this is whatever bull run is a good bull run or a trend reversal or change of character. When market is just going because of rumors, because of hypothesis, because of hypothetical things, like what people were saying, Trump has not talked anything about India. it doesn't mean US is not going to tax India, right? So he is a mad guy. He can do anything. He will come up with anything. We really don't know. So we are in uncertain times. So Trump, from Trump coming to office till now, January 20th, he came to office. I think January 20th, I believe. Yeah, he came to office till now. We are seeing huge volatility. We are seeing Nifty moving 400 or 500 or 600 points in one single trading session. It's a very hard time, and 15% we have corrected, 15%, almost 15%, and still we believe we will correct more. And as I told you, stoppages, which is SIP stoppages, are increasing. So there are lots of concern in terms of market. Now market has gone on the higher side, right? Now you go and see the FII data tonight or end of the day, you will see that there are lots, they would have been still net sellers only. So every opportunity, every rise in the market is an opportunity for FIIs to short this market, and they will short this market going forward as well. So the valuation, in spite of Indian markets correcting around 15%, valuations have not been corrected. Valuations are not fair enough. We need fair valuations for FIIs to kick in, for FIIs to come in. If FIIs are not able to support, Indian market is not going to go anywhere. Now you imagine, DIIs have bought for around 90,000 crores. FIIs have sold for 75,000 crores. In spite of DIIs buying for 90,000 crores, market has corrected around 15 to 17% in the last 5 or 6 months. Let's say including this month also, maybe 5 or 6 months, right? So in spite of DIIs, you calculate all 3 months, maybe January, February, March, we are sitting in March, you calculate all this, DIIs would have bought more than what FIIs have sold. Still we are correcting, means you have to understand how the market trend is, how the mindset of retail traders, how the mindset of market participants are. So every rise is just an opportunity to short this market. Don't try to go long in this market, is what we have been saying for a very long time. I'm really sorry if you are in loss, but if you are in profit, I'll be the most happiest person for you. But what to do? Things are like this. We cannot shut the shop. We will have to do one thing or another. That's why we are saying be patient, always hedge your position. Don't try to trade without your hedges. We really don't know what is going to happen tomorrow. If there is going to be a big gap up or gap down, that is going to hurt us very badly. So take things seriously and trade cautiously, and don't ignore whatever is happening in terms of US market, in terms of macroeconomic data and everything. So I have talked too much. I'll end this video here. So the conclusion is, try to short this market. And whenever the market rises, try to short this market. And of course, there is a disclaimer. You will have to do it at your own risk and responsibility. I'll end this video here. I'll see you in yet another video. Till then, take care. Bye.